Okay, so you have studied for the whole year, right? And now what you have? Your final exams. And with the result of that final exams, you, your teachers, your parents, your friends, your school principal will get to know how you perform, right? Similarly, there are certain users of the organization. We studied internal users as well as external users, and even they want to know how the organization performed, right? And that is what we are going to do in our this chapter 8, financial statements. Hello everyone, welcome to Akira's Academy of Accounting and Finance, and let's discuss about financial statements. Okay, so the initial chapters, in the initial first chapter itself, we studied about the accounting process, and at that time I know you were not clear about that process, right? But now you have studied each and every stage of that process. What was the first stage? First stage, we identified, measured, and then we record a transaction. Where do we record? How do we record? In the journal books by passing journal entries, right? After passing the journal entries, what you do? You classify them into their respective accounts by doing ledger posting, right? Now you prepared separate accounts for each and every transaction, and now you have reached to the third stage, wherein is it the summarizing of each account, right? How do you summarize each and every account? By preparing trial balance. Okay, every account has two effects, every transaction has two effects, and that is why we got to know the debit balance will be equal to credit balance, right? Now after preparing the trial balance, you don't know like how the organization has performed. Okay, like trial balance does show the balances of each and every account, right? How you will get to know how they have performed for the whole year? When you prepare and present the financial statements, right? Now what are those financial statements? What does it consist of? It consists of two things. One is trading and profit and loss account, and the other one is balance sheet. Okay, trading and profit and loss account is also called income statement. Okay, so this trading and profit and loss account as well as balance sheet will let you know the financial performance as well as the financial position of the business. Okay, what it consists of? It consists of whatever money you have paid and whatever money you have received. Okay, whatever organization has paid money to somebody or received money in some or the other form, it shows that, and from that we get to know the financial performance as well as the financial position of the organization. Now what are those money paid and money received? These are the expended, these are called the expenditure as well as receipt. Expenditure, where we have spent money. Okay, now those expenditure has been categorized into two parts. One could be capital expenditure and one could be, and the other is revenue expenditure. Okay, now when I say capital expenditure means what? We have spent money on something and we are going to get its benefit not only for 1 year but for more than 1 year. That means we are going to get a benefit of more than 1 year. Okay, what are those expenditures? Those expenditure could be the assets. Okay, you have invested in assets, you have purchased plant and machinery. Now you can't use the whole plant and machinery in that particular year. Okay, that plant and machinery could be used for more than 1 year till its useful life. You have purchased a building, you have purchased furniture, fixtures, you have purchased motor vehicle. They don't give benefit only for 1 year, right? They give benefit for more than 1 year. Wherein when we say about revenue expenditure means what? You have incurred expenses and that expenses will give you revenue for 1 year only. Okay, so the expenses incurred for a year, for the current year, whatever expenses you have incurred for the current year is called revenue expenditure. Okay, whose benefit you will not get for more than 1 year, right? The salaries you paid to the employees, they will work for that particular period, right? They don't work for the next year also. If you won't pay them salary for the next year, they won't work for it, right? You are paying the electricity bill, you are purchasing the goods, they are going to benefit, they'll benefit you for the current year itself, right? You won't get the benefit of the same for the next year. You pay the bill this year and that doesn't mean you'll get a free electricity next year. You pay the rent for your building this year, that doesn't mean you will get the you can use that building for the next year if you don't pay the rent. Okay, so revenue expenditure means what? Those expenses which we have incurred for the current year and whose benefit we are going to receive in the current year only. Okay, similarly when we talk about receipt, that is the money we received. Okay, those receipt can also be categorized into two parts, that is capital receipt as well as revenue receipt. Okay, when I say capital receipt means what? There is an obligation to pay that money, right? We have got money from somebody and there is an obligation. You have to pay that money, you have to return that money. So there is an obligation to return money. Now when I say obligation to return money, it may be in the form of the owner's capital, right? The capital we have studied in our accounting concepts that the owner as well as the organization, they both are separate entities. So whenever the capital is being introduced by the owner, the organization has to pay. Okay, so the organization has received money, but there is an obligation to return the money to the owner, right? Similarly, there are third party liabilities also. If you have taken loan or anything, okay, so you have to pay that amount, right? So this could be the capital receipt. Moreover, like we studied in reserves that there is a profit. The other form of capital reserve could be the profit on sale of fixed assets. Okay, we studied that whenever we get an amount more than its purchase price, it becomes a capital profit. Machinery purchased for 1 lakh and you sold it for 1,20,000, over and above the purchase price is the capital profit, and that is also known as a capital receipt. Now when I say about revenue receipt means what? There is no such obligation to return money to somebody. Okay, so when I say revenue receipt, there is no obligation to return money. Now that could be in what form? The major form of revenue receipt is sales. Okay, major form of revenue receipt. Okay, when we sell the goods, we get money and there is no such obligation to return money, right? So sales is one of the major revenue of the organization. Similarly, if the organization has invested in certain investments, they are going to get interest on investment, or else they get commission on sales. So these are the other incomes. Okay, and this is known as revenue receipt, whereas there is no such obligation to return the money. Now when I say expenditure, this is what we are going to show it in our financial statements. So when I say capital expenditure, capital receipt, where we are going to show it to them? We are going to show them in the balance sheet, right? Capital expenditure, capital receipt, we'll show it in the balance sheet. When I say revenue expenditure and revenue receipt, we show it in our income statement, that is trading and profit and loss account. Okay, now why there is such demarcation? Because this trading and profit and loss account shows us the financial performance of the current year, how the organization has performed, whether the organization has earned profit or they have incurred certain losses. We get to know when we prepare the trading and profit and loss account. So whatever activities they have done in the current year, they have received money for the current year, they have paid money to somebody in the current year. So whatever current year activities they have done, they'll get to know how they have performed in that particular year. So their profit and loss we get to know when we prepare trading and profit and loss account. Whereas what does the balance sheet shows? The balance sheet shows the financial position of the business. What is the financial position? What are our assets? What are our liabilities? What are our capital? What is the capital amount? How much we are owing and how much we have to pay. Okay, how much is the liability that we have to pay, and how much in that, for like, do we have a sufficient amount of assets to pay off those liabilities? So it shows the financial position of the organization. Now if you are clear with these things, the financial statements are very easy to prepare. Why? Because when you are preparing trading and profit and loss account, what you need to show? You need to show the current year expenses and revenues, right? Nothing related to capital expenditure. Okay, but when you prepare balance sheet, what you need to show the capital expenditure and the capital receipt, right? Now we will discuss how we will prepare the trading and profit and loss account. Okay, now let's talk about trading and profit and loss account, which is also known as income statement. Now what is trading and profit and loss account? It is basically which shows how much profit the organization has earned or the loss they have sustained during their operational activities. Okay, so it basically shows how much revenue and how much expenses have been incurred in the particular current year, right? Now let's start with the basic thing. Let's say I am into a business, or like I thought of selling this pen, right? To sell it, I need to purchase it, right? Now I purchased this pen for, let's say, 10 rupees, okay, and I'm selling it for 15 rupees. So this 5 rupees is what is my profit, right? Now I am into this business. I have purchased a quantity, like let's say 1000 units of pen I have purchased. So now my purchase price is 10,000 and I am selling it for 15 rupees. So my total amount received is, sale price is 15,000, right? Now I purchased it. I can't just have it like that. I have to go somewhere from whom I have to purchase this pen, right? Or I will order that person to get it delivered to my place, right? So what I need to pay? I need to pay for the transportation, the goods coming into my business. For that I have to pay the transportation. That transportation cost is called what? It is known as carriage inward or freight inward, or we can also say cartage. Cartage is what? Local transportation. When I say about carriage inward or freight inward, we have to pay when the goods are coming from roadways or railways or through sea or through air. Okay, so I have to pay that transportation cost. Okay, now let's say that transportation costed me 1000, right? Now let's say I thought, okay, now my business is growing nice. Instead of purchasing this, I will buy the raw materials and I will make that raw materials in my unit, right? Now when I am manufacturing this raw material, I need help of certain people. What I do, I will ask certain people to do it for me. Who are they called? The factory workers, right? I have to pay money to them, right? They are doing that work for me. I have to pay money for them. So the money paid is called what? It is known as wages, right? So that also become the cost for me. I have to pay it. Let's say I have to pay 1,000 for that also, right? Now I can't manufacture all these things on the road, okay? I need a particular building, okay? That building is known as a factory where all these things will be done. Now I am renting that building, okay? So I have to pay rent for that. So the factory rent I am paying, let's say 500, right? Now I am using the power, the gas, the water over there. For that I am paying rupees, let's say 100. Okay, so this is the cost that I am paying to manufacture this particular pen. Now my profit will be how much? My total cost is how much? 10,000 plus 1, 11, 12, 12,600. Okay. Earlier my profit was 5,000, right? This is the profit when I'm purchasing and selling. But to make this particular pen, whatever the cost that is incurred to make it in a saleable condition, remember, I have to incur these costs, and these costs form part of what? For the goods that I am selling, right? Now how much is my profit? My profit is 2,400. Okay, and this is called what? This is called as the cost of goods sold. Cost of goods sold. I am purchasing 10 units. I'm purchasing 1,000 units and selling the entire 1,000 units, right? To sell that 1,000 units, how much cost I have incurred is known as cost of goods sold, and the amount is 12,600, right? Now, and what is this known as? This 2,400 is known as gross profit. This is my gross profit, right? So this is how what is called as the direct expenses incurred. This is the direct expenses. These are the direct expenses incurred to make the product manufacture, to make it sell. Okay, it's the basic operational activity. These expenses are related to the basic operational activity to make the goods in a saleable condition, right? And now you know the term, what is cost of goods sold. Cost of goods sold, whatever cost we are incurring to make that particular product is known as cost of goods sold, right? Now all these things come where? These things form a part of trading account. Okay, these all things, the sales and to the goods that I am purchasing and the cost that I am incurring to make it in a saleable condition, it's particularly relate to that particular trade. Okay, so it comes under the trading account. Okay, now it's not necessary that 1,000 units I am purchasing and I am selling all the 1,000 units. Okay, I may retain. It's not necessary that all the units will get sold out. Okay, so I am retaining certain units. Let's say 500 units is being retained by me. So 500 units is being retained. I have sold only 500 units. The cost. So how much? I am left with 7,500, right? This is the price that price at which I have sold, 15 rupees per unit. So I have sold 500 units for rupees 15, and this is the sales amount, 7,500, and now I am left with 500 units of the stock. Okay, so 10 into 500 equals to 5,000. What is this? This is my closing stock. This is my closing stock. Okay, it's not necessary that you sell all the goods. So now what is the amount? It is 12,500 and my cost of goods sold is 12,600. That means I am incurring a loss of rupees 100. What is known as, it is termed as gross loss on those particular goods, right? Now that is also not necessary that maybe I am producing, I am manufacturing, and there is certain stock which is already left out with me of previous year. Okay, that previous stock also I need to consider. Okay, so that is the total stock left with me. Let's say I am having 200 units of the previous year whose cost is 10 rupees only. So I am having 2000 units of goods with me already of the previous year. So this 2000 is termed as what? This is known as opening stock of the goods which I am carrying it forward to the current year. This is the stock of the previous year. I am carrying it forward to the current year. Now what is the amount? It is 14,600. Okay, 14,600. That means I'm incurring a loss of now 2,100, right? This is called as gross loss. Okay, now we studied a term known as cost of goods sold. What we need to identify, what is the cost of the goods that we are selling in the market, right? So how much unit I have sold? I have sold 15 units. So I need to identify, I need to measure what is the cost of the goods. Oh sorry, not 15 units, I'm selling 500 units. So I need to identify, I need to measure how much is the cost of those particular 500 units. How I will get to know? I will get to know when I already have the opening stock. Okay, plus I need to add the purchases, the current year purchases that I have done of that particular goods, plus whatever direct expenses I have incurred on those goods, right? Less, now I am left with the closing stock. These goods I have not sold. Okay, these goods I have not sold, so I have to deduct those amount also. What I am left with is cost of goods sold. I will get to know the cost of the goods which I have sold it in the market, right? In this case, what will be the amount? I was having 2,000, okay, of opening stock plus purchases. This is purchases of 10,000, right? Plus the direct expenses I incurred on it, that is 1,000, 2,000, 2,600, right? Minus what I will deduct, the closing stock which I have not yet sold. It is there in the stock, so I have to deduct that amount also, that is 5,000. So what is my cost of goods sold here? 12,000 plus 14,600 minus 5,000, that is 9,600. So this is the cost of goods sold. Okay, and this is how we will prepare a trading account. Things which we need to keep in mind while preparing a trading account is the performer, how we have to, what are the things that we need to write it. Okay, so it's trading account of Mr. ABC for the year ended 31st March 2025. It relates to which year? The financial year which ends on 31st March 2025. Here is the credit, here is the debit. Here I will mention on the debit side. Okay, I have purchased the goods, I have a debit balance of purchases. I need to write the purchases. I close the purchase account. Okay, I have to close the purchase account. I need to transfer it to the trading account. Okay, what entry I will pass? Trading account debit to purchases account, right? Less purchase return, we have a credit balance, right? So what we need to do here, we need to deduct that purchase return amount, okay, from the purchases, which is also known as return outward. The goods goes out from the business, we returned the goods. Okay, so we will get to know this amount. This is also known as net purchases. This is also known as net purchases. In exam, you will be given net purchases, or else you have to calculate, you have to take the amount of purchases, deduct the purchase return amount, right? Then all the direct expenses incurred to the manufacturing or production of that particular goods. Okay, these are all the direct expenses which have been incurred. We need to debit it, we need to close all these accounts, and we need to debit it to the trading account. And on the credit side, we have to close the sales account. Sales have a credit balance, right? Sales account will be debited, we close that sales account. Where we credit it to the trading account. So sales amount, sales return, we deduct the sales return, which is also known as return inward. Okay, we sold the goods, come into, there are certain goods which comes into the business, they returned the goods, it is known as return inward. What is this? This is net sales. Okay, you might be given net sales also, you might be given this also, or both, to confuse you. Okay, then I have to keep the closing stock. Closing stock will not be there in your trial balance, right? It won't be there. Closing stock, how you will get to know? When you calculate that stock. Okay, and that closing stock will have two effects. When in first effect, you have to show it in the trading account, and that is an asset for you, so you have to show it in the balance sheet as a current asset, right? Closing stock, also known as the inventories, we will credit it. This is the stock which is left. Okay, we have to credit it, and whatever is left, if the debit side is more as compared to the credit side, likewise we discussed, we will have a gross loss. But if the credit side is more as compared to the debit side, we will have a gross profit. Okay, this relates to the basic operation to make the goods in a saleable condition. Whatever expenses I have incurred, I have to take into consideration. Okay, but let's say my business, okay, is running fine, but I have to grow my business. Now when I want to grow or expand my business, what I need to do? I need to buy a building, office for me. From that office, I will think of asking people to help me in that particular business, or else I need to first make people know about my product, right? For that, how people will know about my product? I need to advertise about it. Okay, for that advertisement expense will be there, right? Along with that, if I need to advertise, I need to get it printed, right? So I need to give money for printing and stationery as well. Nowadays everything is getting delivered at home, right? So I have to deliver these things. If somebody asks me, I have to deliver these things to people at their home. So I have to employ a person, give him the salary, who will deliver all these things to people's homes, right? So there is a delivery expenses also. Moreover, everything is getting online. I want to expand it more. I start of selling on all these things online. Okay, I need to employ people for all these things. That people won't work for free, right? I have to pay the salary to them. So those salary expenses, moreover, like I am living, like I got this office, right? For that office I need to pay a rent. So all these things are not related directly to the production of this particular pen, but it is indirectly related to make the business run smoothly. Okay, without any difficulty, to grow it, to make it run smoothly, I am incurring all these expenses. So what are these expenses called? The rent, salary, commission, printing and stationery, bad debts, depreciation, advertising, interest. I took a loan on that particular amount, I am paying an interest. So these are what? These are indirect expenses. These are indirect expenses which I am incurring to make the business run smoothly, right? So these all will come under what? Profit and loss account. Okay, profit and loss account, we will debit, we will close all these account, and when we will debit it in the profit and loss account, right? These all rent, salary, commission, printing, all these have a debit balance, right? We need to close it, we will credit it and debit it to profit and loss account when we will close this particular account. Similarly, when I am purchasing certain goods, I receive discount, so discount received. I have made an investment, so interest received. So all these are not part of the sales that I am doing. Okay, these are what? These are considered as other incomes, which is not part of the goods, the operational activity, but this is what I am receiving an income. I may receive commission. So these are the other income which will get credited. These account will get closed and will credited to profit and loss account. Now comes here net profit, net loss, gross profit and gross profit and gross loss. Now this gross profit will get transferred to here on the credit side, right? We will transfer it so that we will get to know whatever net profit I am incurring, right? And gross loss over here. Okay, net profit or net loss, whatever it be, we will get to know about the net profit and net loss from this activities. Okay, this will be the actual profit or loss which has been earned, or the profit earned or loss sustained by the organization, right? So this is all relates to the operational activity, but these expenses are indirectly related. Okay, there is no direct cost related to the manufacturing of this particular pen, right? But these are indirectly related so that I can sell it smoothly, I can run my business efficiently. So these expenses I have to incur, right? Now these all form part of operational activities. Now we will understand this term operating. Here we understood the term net profit and net loss. Now we need to understand the term operating profit. What is an operating profit? Which is not the profit which is forms a part of the operational activity. Okay, so what is a non-profit non-operating profit or non-operating expenses or income? Likewise, interest paid on loan. This does not relate. I took a loan. This does not relate to the operational activity, right? I took a loan because I needed a money, or I wasn't having a sufficient capital. So the interest I'm paying on the loan does not form of part of the operating profit. So what is an operating profit? It's the net profit which I have. From that, what I need to add the non-operating profit, non-operating expense, the expenses which does not form a part of the operational activities. Interest, these all are the operational activities that I am doing. For that I have incurred certain expenses. But interest paid on loan or the interest received on investment, I have money, I have invested in some businesses. So the interest received, let's say if there is this discount receipt forms part of the operational income. Okay, this forms part of the discount received. It forms a part, the discount I have received on the goods which I am purchasing, and they have given me discount. So this discount received form a part of the operational profit. But interest received doesn't form. Interest received is I am having money, my business is having money, and from that money I have invested in some other businesses and I'm getting an interest. So interest received doesn't form of the part of the net profit. I have to deduct that non-operating income, right? Then what I will get an operating profit. This is the profit which is also known as earnings before interest and tax. This is the earnings. Operating profit is the earnings before interest and tax. So you need to understand this term. You need to understand what are all these things, because these things can form a part of your questions. For 2 marks or 3 marks, they will give you an amount and you need to calculate it. Similarly, cost of goods sold. These two terminologies you need to understand, right? I hope now you know what is trading account, what is profit and loss account. Now this profit is whose profit? It is my profit, the owner's profit. So where this profit will get transferred, it will be added to the capital of the owner. Okay, now the organization is liable to pay this profit amount, or if the loss has been sustained, they have to reduce the capital amount. So this net profit or net loss will either be the net profit will form a part of the capital, owner's capital. We will either add it, or if there is a loss, we will deduct that amount. Okay, this is what we are going to show, the capital that the organization is liable to pay to its owner. Now where we will show this capital amount? In the balance sheet. And how to make a balance sheet, I'll show you now, right? Okay, so this is how the balance sheet of an organization will look like. What is a balance sheet? What does it refers to? It refers to the financial position of the business organization, where the organization stands. Okay, how much of asset the organization is having, how much is their liability, how much is being owned by them, and how much they owe to somebody else. Okay, when I say asset, this is owned by them. Okay, and this is what they are liable to pay. They owe to somebody else, they have to pay. Okay, so how we will get to know? When we will prepare the balance sheet. And now you'll be like, why the term balance? Okay, balance sheet, because the total of liabilities and the total of assets will always be the same. Okay, if it is not same, that means you have committed a mistake. You have done certain things. Maybe you have debited something which was supposed to be get credited. Maybe you have shown your expenses as an income as an expenses, because we know in an accounts every debit has an equal credit, right? That is why the balance sheet is going to get tallied. Okay, now when I say what do we show in the balance sheet, let me tell you. On the liability side, liabilities means we are owing to somebody else. Okay, so to whom we are owing? The first and foremost is who? To the owner. What do we owe to them? The organization and entity, the business organization and the owner, they are separate entity, right? So they have to pay to their owner also. What the owner brings? He brings the capital. Okay, so the capital amount is the liability. Along with that, whatever profit in the current year the organization has earned, they have to, it belongs to whom? To the owner. Okay, to the owner it belongs to. So we will add that profit earned, or we will deduct the loss sustained by the organization, and we will get the net amount of capital which the organization is liable to pay to its owner. Okay, second is the long-term loan. If we have taken a loan from somebody, or if we have taken a loan from the financial institutions, bank, we are liable to pay to them. So the long-term loan, short-term loan, 3 months period, it's due, we pay them, it's a short-term loan. The creditors from whom we have purchased the goods on credit. So the sundry creditors, sundry means all the creditors, we are liable to pay them, it's our liability. Bills payable. Okay, bank overdraft is also a liability. Bank has provided that facility. So we were not having sufficient cash in the bank, and still bank provided a facility wherein we can overdraft, we can take more amount as compared to the balance was not available. Okay, because of an insufficient bank balance. So bank overdraft, that is also a liability. Now what are the assets? How much is being owned by the organization? What are my assets? There are fixed assets, which is like tangible assets and intangible assets. Tangible assets, which we can see, which we can touch, like the building, plant and machinery, and furniture and fixtures. This amount we have to deduct depreciation, right? If you remember, in the depreciation chapter we discussed how we will show the building in the asset side of our balance sheet. We will take the purchase price, we will deduct the cost of depreciation, and we will show the net amount. If we are keeping a provision for depreciation, we will show it here. If there is a provision for depreciation, we will show it on the liability side, or else we can deduct it from the purchase price. Next year on the written down value we will deduct a depreciation. So whatever it is, building, plant and machinery, furnitures and fixtures, we will show the net amount, right? Then there are intangible assets, we discussed depreciation, amortizations and depletion of assets, right? So intangible assets are what? Which we cannot see, which we cannot touch, and they get amortized over its time, right? So goodwill, patent and trademark. There are other intangible assets. Now there are long-term investment. The organization has invested into certain businesses, so that is also an investment for asset for the organization. So long-term investment. Inventories, which is also known as the closing stock, the stock which is still with the organization, okay, they have not sold it, okay, at the end of the year they are left with the certain stock, that is the closing stock, which is also known as inventories, right? Debtors, whom we have sold the goods on credit. Bills receivable, that is also goods sold on credit, and but after a particular date, at the time of maturity, we will get the amount cash at bank, okay, and cash in hand. This is what is being owned by the organization, and this is the asset of the organization, and this is how we are going to present it in our books, the balance sheet. Now balance sheet can be shown in two ways, okay, it's marshalling of assets or grouping of assets or liabilities. Now what does that mean? We can show it in the form of, in a chronological order, or in the form of two ways, liquidity or permanence, okay. There's this term liquidity or permanence. So the asset or liability, when I say about permanence, when I say the assets or liability which are more permanent, right, which are not easily liquidify, which stays with the organization, first we will show it to them, then slowly and slowly which assets or liabilities which get liquidify after on the steps, as then they are being shown. Likewise, if we say about assets, the assets are the, they are permanent assets for the organization. So we will show the first assets, then intangible assets, then investment, okay, then they will get liquidify, the inventories, then debtors are less liquid as compared to the cash in hand and cash at bank, right? Debtors, then bills receivable, then the cash at the bank which we have as compared to the cash in hand. So you can show it in that way or in the reverse way, that if we show it in the reverse way, it is known as in the form of a liquidity, right? Similarly for capital, the capital, owner's capital, when he will get the capital at the end, right, when they wind up. So the owner's capital, then the long-term loan, then short-term loan, creditors, bills payable, bank overdraft. So this is how we are going to show, we are going to represent, or this is how the performer of balance sheet will look like. I hope you got these terms, financial statements, all the things, the profit and loss account, the trading account and the balance sheet, and how, like, you need to understand the terms also in this particular chapter, because on that basis only you will be able to understand the second chapter. You will be able to do the adjustments in the second chapter. If you are aware, you are aware of these terms, then it's going to be very easy. The cost of goods sold, the operating profit, the non-operating expenses and incomes, all these things I want you to understand, and you just keep it in your mind what are all these things. No need to rectify anything. They are the basic things, the most common or basic things. If you just understand this terminology, it's going to be very easy for you. I hope you got it. See you in the next chapter. Thank you very much.